Is it time to start preparing for this stock market to rip? We're going to talk about that in today's episode of the Stock Market Brief Show. My name is Michael Silva. If you're new here, welcome to the channel. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. If you haven't done so already, hit that thumbs up. It is greatly appreciated. We got a lot to talk about in today's episode. We are going to cover whether or not we should be preparing for this stock market to rally. I think we should always be prepared, but we're going to talk about some key levels. We're going to get into crypto, and on top of all of that, I'm going to be sharing with you some of the U.S. industry indexes that are performing well that I have been keeping an eye on. So let's go ahead and get into today's show. All right, everybody, welcome back. We are looking at the S&P 500. So we had a bullish day today, but overall, right, it was an inside trading day. We had a little bit of a gap down, and then we closed just around the high of the day. So in any time these type of days happen, you want to at least be prepared that, hey, is it time to potentially move up? And from a bullish case, this does look like a bull flag, right? Or potentially the right shoulder building out of an inverse head and shoulders. So it's something to always pay attention to. We'll map out some key levels. The one concerning thing that's going on right here is that this move today, right, up 1.12% as we're coming into the earnings season, it did so on declining volume. And that is something that we want to be mindful of, right? If we get a rally out of this, but it's on weaker and weaker volume, but then all of a sudden we sell off on increased volume, that's never a good sign for the bulls. Okay, now we do have a couple of other things that we want to just pay attention to here. And that right now is this RSI. Notice how we are putting in a low, a higher low, and a higher low. So as long as it can hold that trend, that's a good sign showing that momentum could be picking up. It would be better if the RSI gets back above that 50 and continues to perpetuate up. That could send us to right around 4,600 again to retest those levels. Very same situation is here on the MACD. If you actually connect this high and you draw it downwards, you'll see that the momentum on the MACD is starting to curl up. The histogram turned up a little bit. So if that holds too as well, that would also be a good sign indicating that we might have some further upside there. We did recapture that 50-day moving average, but we're still below the Godfather 200-day moving average as well as that 20-day moving average. Okay, let's continue on. If you take a look here at the risk range, right, the upper level, the lower level, we've just been kind of just doodling along the lower risk range, right? We came down into it. We came outside of it. We set up. Now, this is not where you want to short, right? This is not the place. And, you know, if you know how to play tactically, you can play intraday for a long position. And if you did that, well, price is right now back within that risk range, right? 68% of the time. It closes for the week within this range. So knowing these levels are extremely important, not just for the S&P 500, but some of the other products that we'll talk about. If you take a look at the 15-minute time frame, we talked about this in the end of yesterday's video. We talked about these falling wedges with the positive divergences showing, and we said, don't be too surprised if price comes and closes around on the week, right around the 5-day moving average. Came right up to the 5-day moving average, almost pristinely, right? Hit it here, resistance, resistance. Right here. Is it going to be resistance again? Is it going to come back down, reskirt that lower risk range, potentially try to put in a miniature inverse head and shoulders, and then potentially head up? I mean, that would be better in my personal opinion versus, you know, continuing this straight line up, right? Because if it moves straight up, understand that the context of the 5-day moving average is still declining. We still have resistance overhead, that gap above us. So if we get a little... Watch out for that tomorrow, okay? If we gap up and we end up right around here, right out of the gates, I'd be cautious of that because that could be acting as overhead resistance and we might pull back down and then potentially fill the gap from that previous gap up. Okay, so a lot of things going on as it stands right now. Not a very clear entry or clear position as we're really heading into this earnings. We have more earnings, a lot of earnings coming out tomorrow. If you take a look at the VIX did not crack that 25 level, right? That was one of the key levels we were watching. It came up to it, but then it started reversing and it closed that gap right there below us. And you can see it pretty much closed, you know, within that gap after closing it. So it could very well bounce. We do now have this gap above us and this gap above us too as well. And even past that marker, we have one up at around 45, and those gaps do typically get filled. Coming on deck for earnings, Goldman Sachs, Morgan Stanley, Wells Fargo, Citigroup, USB, and then also UNH is another ticker, healthcare, that will be reporting earnings too as well. So, you know, anything's on the table right now as it stands. So, if I take a look really quick, why am I looking at Microsoft? I don't want to look at Microsoft. I want to look at financials. Okay. if we take a look, because we are reporting earnings on financials, look where it tagged. It tagged the lower risk range. If you're prepared, if you knew that level, presents itself an opportunity, started moving up, right? But it did so on declining volume there too as well. So it's very, very possible if, bad earnings come out again, right? JPM today, not that great. It ended up hitting its lower risk range to the T and closing there. It's very possible that this comes right back down to the lower risk range. So we can't rule that out, especially on all of these financial earnings that are coming out here. Now, if we take a look at the heat map, what took place today? Well, we had Microsoft, Apple, Google, Amazon, Tesla, all the big dogs were up. You can see JPM reported earnings. That was down 3.2%. ABBV got hit pretty hard too as well. But overall, a very, very bullish green day. Now, we've been talking about these risk ranges and how Microsoft and Google were getting outside of them, and we talked about how that could be a potential opportunity, right? Well, take a look here. Microsoft got pretty far outside of it, and look where it came into. It closed. It came right back to. It's like moth to a fly right here. A moth to a flame. All right, it came right back over there to that range. So it's very possible that we finish around this area. However, also don't rule it out that we come fill this gap above us. We only have one trading day left. That would be a big move for Microsoft. And if Microsoft moves like that, other tech stocks are going to probably be moving like that. So it would probably be another big green day in the queues if that's actually the case. Okay, and then also to mention, we have Google, very similar situation. We're coming outside of the risk range. We came right back within it. Okay, so 68% of the time, it closes within that risk range. We have one more trading day left. We're at the lower risk range, right? So where is the risk to reward here? I feel like there's a little bit more reward to the upside than there is risk to the downside. However, you just need to still be cautious, obviously, in this current environment. If we take a look at the dollar did back off a little, okay? So is the market getting ready to rally here? Is the dollar going to take a little bit of a breather? And is the S&P 500 going to start shooting up? Well, I'll tell you, when this rips up, we've seen the market pull right back down. Now we finally had that down day in the dollar. Hardly, right? If it takes more of a breath, we were talking about this pulling off. That might be good for various commodities and also potentially the S&P 500 here too as well. You can see red day, green day. It's just interesting how that works. Now, this is where it also gets interesting. If we look at the NASDAQ composite, right? So we went on this big run, and then check where we pulled back to. This is exactly where the level that we're talking about, right around that 60, we said 50 to 61.8% retracement level. Well, we tagged it, and now we're starting to bounce, and we close right back above that 50% retracement level. So if we do get a continued bounce, look for the 50-day moving average, which is back right around that 38.2 area on this Fibonacci retracement tool, okay? If it comes up to there, that could very well act as a confluence area of resistance. But you can see it's kind of wedging, it's kind of flagging right here. So definitely not one to just ignore. I will also note that the NAMO, the McClellan oscillator, we had a low and a lower low here, but meanwhile, we were putting in a little bit of a positive divergence there. As far as the relative strength line goes, it's still below that 50-day moving average, and the advanced decline line on the NASDAQ also still below that 50-day moving average. So those are a couple indicators that we'd like to see start to turn up a little bit to feel a little bit more confident that it's going to be a sustainable bounce if it does come. If we look at the broader market and we look at the New York Stock Exchange, and we look at the advanced decline volume line, interesting take here, right? I don't know if it's going to hold, but the Bollinger Bands were getting tightly contracted, and we saw a spike above the blue line here, which could indicate that, hey, there might be some further upside here. We might get that. If I take a look at the advanced decline issue line here, you can see that the New York Stock Exchange is NYA. It's forming a nice pennant, nice flag right here. But overall, right, keep in mind the trend. The trend is still down, right? High, lower high, lower high, low, lower low, lower low. So we're trying to get ready and prepare and see, where's the best opportunity. And as it stands right now, this does make sense if it starts breaking out to start going long, right? It does, because if it starts breaking out, and maybe we don't get the volume that we need in order to really suffice it. But okay, if it turns back around and you have a stop loss here and then it comes all the way back down, you took an educated risk right there. Based off of, risk to reward issues. Because if this does take off and all of a sudden you're trying to chase it back up, like people were chasing up in here, let me clear that. People were chasing up in here. We're basically saying at that time, we're like, okay, everything's getting a little too overextended, a little too frothy here. So prepare for consolidation, digestion, or a pullback. And that's exactly what we got. So now we're preparing, right, as price action expands, it will then contract. Price action is contracting. Now we got to start preparing ourselves for a potential move to the upside that gives us a good risk to reward for if we are stopped out, well, then guess what? It is what it is, you know? Let's continue on. If we take a look at the Qs tag that lower risk range. They've been there pretty much throughout the full trading week. If you really take a deep look into all of these risk ranges, what you'll notice is on a lot of these products on the week, they haven't even moved anywhere. They've just been very volatile to the downside right out of the gate, and now they're recovering right around midway where they're relatively unchanged on the week. So you know, the door's open still at this particular point in time. It's going to be an interesting week next week too. If you take a look at the 15-minute time frame, that wedge we broke out with fury. So if you were prepared to take that risk to reward trade, boom, right up to that 5-day moving average, which is still declining. That's where price got, you know, hung up a little bit there. So, you know, what are we going to see? Maybe it pull back. Maybe it come back to retest this level, right? It was a low volume rally. Don't be shocked to see that kind of stuff happen tomorrow. But what we can potentially see too is price, right? High. So a low, maybe potentially put in a higher low. Maybe it gaps up and continues to go like that. I don't know. But what we want to see the 5-day moving average start to flatten out. That means we're in a neutral trend, right? This is a downtrend, neutral trend, and then we want to have it obviously turn into an uptrend. So even if it goes up here, right, there'll still be some sort of consolidation if we are starting to rally back up, okay? So that is just kind of my thought process there. If we take a look at the IWM, guess what? Right, JPM didn't do all too good on its earnings, but we had a lot of other products playing. So IWM did perform well. It was overall just an inside trading candle, okay? And where did we finish at? Right at that 50-day moving average. So can it come here and tag this upper risk range? Obviously, that's a possibility. It's definitely within reach right there. But, you know, if it comes right back down here, you know, which is not far, you know, we're relatively unchanged for the entire trading week. And remember, it's going to be a weird week tomorrow, or weird day tomorrow. We have option expiration tomorrow. We have, you know, Good Friday on Friday. So no trading on Friday. All right. So expect some more volatility tomorrow. It's more than likely. IWM also moved with the markets on the 15-minute time frame. You can see we pulled back to the breakout, we came back up. This one is nice because although the 5-day moving average is declining, it's starting to flatten out and price is above it, unlike the other indices. So that is obviously a good sign. But, you know, look at it was an aggressive move to the upside, aggressive move to the downside, aggressive move up to the upside. I mean, like, it's going to have to digest and consolidate at some point here. So it's just a little all over the place. Let's hop into Bitcoin. We're going to look at the Saylor to Schiff indicator, still at a zero, under zero right now. So it's on that sell signal. So we need to be very cognizant of that. But the week is not over, right? The candle will finish forming, I believe it's Sunday at 7 o'clock. Saturday at 7. I gotta double check, but we have some time for this to obviously get back up above the zero line. But as it stands right now, it's right there. An interesting chart that was shared by Martin Pring. I wanted to just, I show this type of stuff pretty frequently, but I just like how he laid it out. But if you take a look up here, it's Bitcoin, and then the chart below it is the relative strength line between Bitcoin and the S&P 500. And you can see how Bitcoin put in a higher high. Meanwhile, the relative strength to the S&P 500 did put in a lower high, which is diverging there. So that is not, you know, the greatest sign. His indicator, the KST, the no sure thing, is also on a sell signal right now, kind of flat to going down, which is also never the most amazing thing. So let's go ahead and look at the daily time frame and for Bitcoin and Ethereum. All right, we're over here at the ftx.us website. I'm going to go ahead and go to the more section in advanced trading. For those that don't know, I am sponsored by ftx.us. I personally use them. I prefer them. You can trade with up to 85% lower fees than the competitors. I'm a big fan of the owner, Sam Bankman-Fried, as well. You can follow him on Twitter. He's a highly respectable figure in the crypto community. So what's really cool about here is you get access to TradingView, and you can also just buy and sell your orders right here looking at the chart through the website. Easy to set up. I have a link in the description below. If we take a look at the daily time frame for Bitcoin, we started to recover slightly here, right? So we still have to recover that 50-day moving average. It is inclining to flat, okay? And be mindful that the volume right now on the way up, it's actually less than the volume than it was on the way down. So we're getting a little bit of a relief bounce here, but it needs to prove itself still, okay? So that is just a little bit of a concern. If we take a look at Ethereum on the daily time frame, it's a similar situation, right? We went down on bigger volume right here. We cracked down through that flag we had mentioned. We said, hey, the 50-day moving average, that is where it can come down to. It tagged it to a T, and now we're starting to see a little bit of a recovery bounce here. So if you added more, I don't know if I discussed that or not, but if you added more, congratulations, we're up a little bit on the position, but still be mindful that, hey, you know, the Saylor to Schiff tool may close at a sell signal, so that's a little bit of a warning. And then 2, the volume is speaking loudly here. Where on the way down it was increased volume, and then it's kind of floating itself up on declining volume, okay? That's not stuff that you really want to ignore taking place, obviously, in these 2 products. All right, so now let's go ahead and look at some of the industries, the U.S. industries that are performing well, and this is where I'm generating quite a bit of my trade ideas that are on my Discord group. And by the way, if you're not in my Discord group, you can, I have a link in the description for that as well. I have this platform called Trade Ideas or Swing Trader, and I started adding expected moves. I have 31 products that I track in there, and I update those weekly. I give some swing trade setup ideas when I see stuff that is available out there in the markets. We've been posting quite a bit of them. You get some general support. You get part of the chat community, which is a great group of folks in there. Yeah, overall, and it's only $9 a month. Let me remind you, it's $9 a month. I do not charge a lot, but if you want it even cheaper, just pay annually. You get 16% off. It ends up being like $7 and some change. I'm getting off track. U.S. industry indexes, let's hop into it. So Dow Jones Chemical Index. Start looking at chemical stocks, right? This is flagging right here. It's made a big progressive move, big expansion. Now it's flagging, okay? And it's above these key moving averages. So this right here, if this is flagging, we're going to break out and go for another run. A lot of chemical type stocks are going to perform with it. If we take a look at the commodity index, I've talked about wheat, I've talked about corn, I've talked about gold, I've talked about silver. Okay, we've been actually sharing some really good setups just here on the show. But this right here is also from a big expansion. Now it's starting to contract here too as well. MACD is starting to turn up. So there's various commodity plays out there that are looking relatively strong overall. And keep in mind, when I'm looking at these industries, I'm looking for absolute performance, and I'm also taking a look at relative performance to the S&P 500 because, you know, I've read in many books that if the relative performance is performing, you can typically get another additional 4 to 12 months, all right, of strong performance out of these. And what we're seeing here on the relative performance is strong performers, but you also want to match that with absolute performance too as well to give you that edge, right? You need a bunch of different factors playing here. Let's go on XAU, which is gold and silver index. Obviously, this continues to move higher and higher. I think it's going to take a breather here at some point, but obviously, it looks like it's a bullish trend, obviously. So on pullbacks, those are the ones that I would definitely be looking into as well. Gold and silver miners. Natural gas also continues to just rip up higher too as well. I would say that this is, strong stocks get stronger. So start looking for natural gas individual stocks that may be in a period of contraction. Right now, it does look like maybe we can get still a little bit of a pullback here in the near future, but you need to be prepared for when we get the pullback because pullbacks are digestion, right? That means we're moving into a period of contraction, and then you want to be ready to back into a good risk to reward trade where that expansion plays in your favor. You want volatility to work with you, not against you. If we take a look at XOI, this is the oil index. So you probably seen oil performing pretty well, okay? Well, from a relative basis and an absolute and a relative basis, also doing amazing. So various oil stocks, but not just oil stocks, oil service index too as well. I posted quite a bit of those the other day. This one also looks very strong, right? Expansion, right? Move up, and now, we have a low, a higher low, a higher low. It's been in this contraction pattern. We have strong relative strength, MACD also turning up. So we have quite a bit of different oil service stocks also playing. Keep in mind, you don't want to just enter in blindly to any of these. You do want to always focus on your risk first because things can turn and they can turn hard, but we got to look for strength, and strength typically gets stronger. Dow Jones Reit Index. There was a couple of these that I posted too as well not too long ago. It was when, it was coming through this trend line right here. And right now we're just in this period of consolidation, right, or contraction. You can see it's tightening up. The 20-day is moving up into this area. The MACD is curling itself over, so it might take a little bit of a breather here. However, this is lagging data, obviously. So if we just take a look at this from an absolute and relative performance, it looks good so far, right? We're just consolidating, getting tighter right here. So if we start breaking out, it makes for a good risk to reward trade if you can find individual REITs. I will stay, a couple ones that I was looking at were in the storage sector. So that was interesting. And then the utility index, also obviously consumer staples too, but utilities, right? Expansion, contraction, expansion. Now let's see if we can get a period of contraction. So as it stands right now, we had the pullback, right? I think that there could be more time to go. I prefer this to actually, pull back a little bit more, start to tighten up and flag sideways like this, like it did right here, because that really, it was just like a no-brainer type of trade, and that gave us just an incredible amount of stocks to trade as well. So those are the industries that I'm kind of keeping an eye on right now. That's all I got for you on today's episode, everybody. I hope it helped out, gave you some insight to what I'm seeing in the markets. I'll see you back here